Welcome to TheoTRADE. This is Don Kaufman, April 24th, 2024. 20 minutes to go to the cash close here on this Wednesday afternoon. You know, if you tuned into the marketplace right this second, we are massively unchanged. You would think, it's kind of holding its own. There's not a lot going on. There is a lot going on. You know, that volatility beast I mentioned, yeah, it is not done with you. Not by a long shot. So as I was saying moments ago, the S&Ps for the most part are unchanged after having been up quite substantially. What the market is doing right now, kind of what I term ebbing and flowing, right on the upper edge of that expected move. So this is the SPX, what I often term the mother of all products. And we're right to the upper edge of the expected move. But as I was saying a moment ago, that volatility, it's simply not done with this market yet. We're getting a huge amount of two-sided trade. I mean, some of the volatility in here, this could hurt a little bit in the next 24, 48 hours. Allow me to explain. All right, so looking at the SPX, the reason I have a little bit of concern right now, clearly we've already had and substantiated a big move. The SPX expected move this week is approximately $96. Remember, that's $96 higher, $96 lower. So we're already up on the week right now about $100. Look, that unto itself is indicative of volatility, right? One thing I constantly also mention is that one of the hallmarks of volatility is, if you will, the violence of the up move. And this is a pretty violent move. But what is at issue into the remainder of the week, just this Thursday, Friday, now clearly we have a lot of earnings announcements coming out, but we're sitting at the upper edge of the expected move. If we start, to breach a little bit higher, the entire trading community has to hedge in the dynamic of the marketplace. So we start heading a little bit higher. For example, Meta earnings are going to be coming out after the bell. We head a little higher, we explode off of it. You could easily see a move 50 handles higher from here. On the flip side, and again, I am actually assigning binary market risk right now. That basically implies, like, don't be surprised you're 50, 80 handles higher. On the dark side of it, don't be surprised if you're sitting at the lower edge of an expected move by later this week. I don't mind, coming here and telling you that, look, this is going to get wild. And anybody that thinks they're going to be able to feel out or predict, the only thing you can do is kind of brace for some of the impact and look at the signs on the screen. And that's what I'm going to tell you, is going to be so imperative moving forward. Sure, earnings on Meta could burst the S&Ps higher. Even if we head higher, I am telling you, we're going to reverse off of it. Why? Bonds. Bonds are actually very close to lows of the session. Bonds look like they're going to break down. Bonds break down, you're going to snap the back of this marketplace. Bonds were not in play last week. Last week, it was all about sell-side activity inside of the S&Ps. The marketplace, it just can't take it anymore. The bond market, though, is going to be instrumental, but here's the most, I think, interesting portion of it. Yeah, Meta is going to have a big impact in tomorrow's trade. But guess what? In the morning, you have a GDP print coming out. You're going to love that on Thursday morning. Then on what? Thursday afternoon? On Thursday afternoon. So don't forget, again, in the morning, you're going to see a GDP print. All right, GDP coming to a theater near you. Jobless claims, some retail inventory, wholesale inventories. Again, it's just binary announcement. This is chocolate-covered hand grenades being thrown into the marketplace in succession. But the fact that the bonds are already this low tells me, again, if any of these announcements come out to spark bonds to sell off even mildly lower, you're going to snap the back of the marketplace. You got to be really careful. And the reason is, another way to look at this is not just look at the bond market, because some of you maybe aren't all that familiar with bond market. Look at the 10-year interest rate. So this is the 10-year treasury. This is the interest rate. I mean, tell me that is not aligned to just explode higher. I mean, you wouldn't be surprised that if we, a couple of weeks from now, we're sitting back at like 5% and facing, recent historical highs in interest rates. In fact, take a look at like a 5-year on that. We're not far off historic highs in interest rates. That GDP print, okay, could drive us there. The GDP print and Meta earnings coming out again after the bell today, GDP print tomorrow morning. So Meta earnings could be spectacular. The market could reverse, though, off of GDP. Then on Thursday night, you've actually got Microsoft, Google, and Intel. Yeah, Intel sideshow Bob in that one. Nevertheless, okay, what's, $5-6 trillion of market cap between friends. But that isn't even what concerns me on Thursday night. On Friday morning, you got PCE data. There is so much stacked. And the more I look at this, though, and I'm trying to be as objective as I possibly can, the bonds intimidate me, okay, because they look like they're going to break lower. The dollar intimidates me because it is creeping back higher, okay? And this is, we talk about like risk on, risk off. If you start to see a bit more of a rally inside of the dollar, they're going to smash those S&Ps. Two-sided trade, people, is here. Now, one of the last things I would actually cover is the S&Ps. They've just been all over the place today, and they have, okay? The volatility futures, they're not backing off an inch right now, which also, portends some risk on the table. Then you start looking at individual products. What's going on inside of NVIDIA? This is some real sell side. So what we've actually seen, some pretty heavy sell side, okay, a bid to cover some of that. They're coming back in to actually literally hit NVIDIA. And that is after NVIDIA was mentioned even in Tesla's earnings call, okay? It wasn't enough to actually save that AI trade. And this time around, you're not seeing an impact per se from Google. Google's sitting at all-time highs, but again, with earnings right in front of it, all right, this one is a little bit of a coin flip. Look, this marketplace, okay, is in a very volatile stance. That has got to be the biggest takeaway from this evening's video. You know that we're already at the upper edge of the expected move, so the market did what it's supposed to do on the week, but it is far from over. And to justify how significant some of the moves could be, not just for the remainder of today, there's only 13 minutes left. Look what we have into the end of the week. Still another $51 of movement being priced in. Think of the irony of that. You've already passed through 3 trading days, and yet we still have another $51 packed in of risk. I can't stress enough. Do not try to handicap each and every move. Take advantage, if you will, of a bid to the marketplace. What that basically implies, if we explode back up off of earnings, off of GDP, okay, lean into it, short into it. If you see, okay, inside of the next 24 to 48 hours, some big sell side activity, back up a little bit. Just back off a little bit, wait for kind of your wave. We would need to be, for me to start selling options premium, gonna love this. We need to be at the lower edge of an expected move, all the way into the 4,800 handle of the SPX. Look, a lot of volatility in store for this marketplace inside of the next 2 trading sessions. Buckle up. It is going to be a ride. Thanks, everybody, for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.